Hello and welcome to the Naked Expat channel. Today I'd like to talk about health insurance. Now there's two specific types of health insurance. I cannot really hope to cover all of the intricacies and caveats and small print with regards to health insurance. But what I'd like to do today is touch on the differences between regional or national health insurance and international health insurance. Also, the potential costs involved, the difference between individual policy claims experience and pooled claims experiences with different companies, and also popular health insurance providers in the Philippines. Now, within the Philippines, Pacific Cross is one of the most popular health providers for expats. Indeed, I've got an insurance policy with Pacific Cross, a health insurance policy with Pacific Cross. And a lot of people, when they take out health insurance, think, wow, that's it, it's fantastic, I'm covered for everything, I'm good to go. Well, not necessarily. What I'm going to do today in a moment is have a brief deep dive into the Pacific Cross policy. If you are an existing Pacific Cross policy holder, don't skip this next 10 minutes because you may well find that I'll highlight some things that you were not aware of. So it's quite important that you do look at the next 10 minutes deep dive into Pacific Cross. What I'll then do is talk about perhaps the advantages or disadvantages of a regional or national health insurance policy vis-a-vis an international health insurance policy. One or the other may be the most appropriate for you now, and one or the other may be the most appropriate for you in the future. And then I'll finish off with a brief roundup of how you can get in contact with some of the providers for more information. So without further delay, let's look at the Pacific Cross insurance policy. This is my Pacific Cross Select Medical Insurance policy, which covers me for up to 5 million pesos. But you need to read the small print. Guys, if you've got a Pacific Cross policy already, please pay attention because certain things that I will highlight, I'm not going to go through all of the policy terms and conditions because we'll fall asleep. But I'll highlight some things that you may not be aware of. And certainly for those that are considering Pacific Cross, I think you will find these things very, very helpful in order for you to make an informed decision. Now, if I scroll down this policy to the first part that I'd like to highlight, your main residence is deemed to be in the Philippines unless otherwise declared and covered by an endorsement to the policy. So it may well be that if you're in the Philippines for less than 6 months in any policy year, it might not be the most appropriate policy for you. An international health insurance policy might be better for you. Alternatively, if you're in the Philippines for more than 6 months and intend to be in most years, then Pacific Cross might well be a good fit for you. Now, if we scroll down a little bit further, you'll see this inner limit. Now, that's to do with an actual policy benefit. Although the policy may cover you for 1, 3 or 5 million, there are specific benefits within that policy that have ceiling caps on them. So once you reach that ceiling of claims on that particular benefit, then you are no longer covered for anything more with regards to that benefit. So that's an inner limit, so be careful of that. Also, a lifetime limit essentially means exactly that. If you've reached the maximum benefit on all of the benefits within the policy, it's going to stop and it's no longer an insurance policy that will cover you. If we scroll down to pre-existing medical conditions, now this is really, really important because if you do not disclose to the underwriters any known previous existing conditions, then they will deem your policy to be nil and void. Now, a lot of people accidentally on purpose forget to mention pre-existing medical conditions, and so that there's also a catch-all in here in part C where the insurance person should have been aware or should reasonably have been aware. Now, you have to be very careful with that terminology because if you don't declare something and the medical underwriters upon a claim say, hang on a minute, because of these symptoms, in their professional medical opinion, you should have been aware of these symptoms and these issues and you didn't declare it, then they won't pay out or they'll pay out a reduced amount. So as always, if in doubt, disclose everything and be as transparent as you possibly can. Otherwise, you might think you're saving money on a standard premium in the short term, only to find out in the long term, the insurance policy is not worth the paper it's written on because they refuse to pay out because you didn't disclose something. As always, insurance and assurance companies are slippery eels. And if they can find a way to get out of paying, they will. So if in doubt, disclose it. If we skip down to section 3.3.1, again, it talks about pre-existing medical conditions. There's a lot of explanation within a policy about pre-existing medical conditions, and they're there for a reason. Now, if you scroll down to coverage abroad, for those of you that have got a Pacific Cross policy already, read this. In order to have coverage abroad, the insured person must advise the company in writing prior to the trip. Now guys, if you're living in the Philippines and you pop off to Thailand for a few weeks, is the first thing on your mind, oh, I must advise Pacific Cross in writing of my trip? Now that's in the policy terms and conditions. If you do not advise them of the trip, they can turn around and not cover you. It's there in black and white, there it is. And also what you need to be aware of is the fact that when you are traveling abroad, say you're in the Philippines and you go to Thailand, this applies, which means unlike perhaps being covered by Pacific Cross where they will pay the hospital directly, if you need treatment abroad, the insured person is required to pay for the medical coverage and file for reimbursement. Now, that covers you for up to 30 days abroad. 31 days, no. And also, you cannot travel abroad for medical treatment. If you want to do that, then you need to continue to watch my video with regards to international health cover, which may well be a better option for you than something that's more focused on local cover. Pacific Cross will cover you for accidents and emergencies abroad for up to 30-day trips, no longer. And you need to pay for those bills abroad and seek reimbursement. And be very, very careful because they have rate charts and they will only pay up to a certain agreed rate chart. If they think that your if they think that your bill is a little bit too high or unusual and that the treatment is somewhat not non-standard, they won't pay out, or they'll pay out a reduced amount. So what you might think is a normal hospital incursion of cost, they may say, no, this wasn't necessary, or this is a higher cost than what we deem to be normal for the geographical area. So be very, very careful of that. Let's scroll down a bit further, shall we? One thing to be aware of is this statement here, which some of you might appreciate and some of you may not. Now, once you are discharged from a hospital, then the cover stops, unless you've paid extra for outpatient coverage. And that's in addition to your premium. It's an extra benefit, it's an extra cost to your premium. If you haven't availed of that, then if you have any procedures and supplies for continuing phase of your treatment after discharge, you're not covered. You've got to pay for those out of your own pocket. Again here, you will note they're talking about pre-existing conditions, including their complications, regardless of status, unless such have been declared to the company and have been included for coverage by endorsement. Guys, a lot of you are tempted to, when you apply for health insurance, yep, I'm fine, yep, I'm fine, yep, I'm fine. No existing medical conditions, everything's fine. Be very, very careful. If you hide anything and they find out about it, or they can say that anybody would have reasonably assumed that you would have had this issue and you should have had symptoms and you should have declared it. Any symptoms in the last couple of years, if you don't declare it, guys, if you're not fully transparent, they will wiggle out of paying, trust me. Now, what I talked about with foreign travel is the same when it comes to local treatment, perhaps here in the Philippines. If you read this section of the policy document, expenses which are in excess of normal, usual and customary charges for the geographical area as determined by the company, not by you, in consultation with reputable medical practitioners and institutions located in the geographical area. So basically, if they think that your bill is higher than what's general and usual, they're only going to pay up to what they deem to be usual, what they deem to be reasonable. So, for example, if your bill is 550,000 peso, and they think, well, the usual for the geographic area is the equivalent of 400,000 peso, that's all they're going to pay out. You'll have to cover the difference. Now, when I saw this, I was quite surprised because some policies have in the past covered COVID, but you're not covered. There is an exclusion for natural catastrophes, injuries or illness arising out of epidemics, including military and paramilitary epidemics, which are declared by any local, regional or international agency or organisation authorised to address health issues in the local and national geographical area or country. So guys, there it is there, all country. So would you have been covered by COVID? Technically not. No, you wouldn't have. I mention this just as a little bit of humour that perhaps if you were considering renting or buying somewhere around Bataan nuclear power station, you're not covered for any nuclear power plant leaks, nuclear waste, or from fission reaction, or from any nuclear weapons. But I guess the nuclear weapons will cover all of us. But you're not covered for any kind of radiation. And finally, as standard with most policies, you have to be very, very careful when it comes to sports and dangerous activities. What you think might be dangerous and what the insurance company thinks is dangerous are two different things. One example is you are allowed to go scuba diving up to 40 meters, which is the general depth for most recreational scuba diving. That's not a problem. However, what is rather interesting is that you would accept that you're covered for motorcycling on a road, but no other type of racing. But what is interesting is you're not covered for racing other than foot racing. There it is in black and white. So therefore, if you're doing bicycle racing, not motorcycle, if you're doing bicycle racing, you're not covered. Now, obviously, it would be relatively apparent to most people you're not covered for bungee jumping, polo, which involves horses, contact sports, rugby, football, etc. But do be very, very careful because holiday recreational activities like jet skiing in a lot of instances are not covered. So you have to be very, very careful. And if anybody's been to Thailand and you've read in the past about the jet ski mafia, you have to be really, really careful because you even put a scratch on the side of these jet skis and you're in for a bill of thousands and thousands of baht. I hope you found these policy provisions and conditions of interest. Certainly when it comes to an existing policyholder notifying Pacific Cross in writing prior to leaving the Philippines, prior to leaving the residence that they have for you. Most of you probably don't do that if you've got an existing policy with Pacific Cross. Similarly, always be transparent on your application form and always don't think for 1 minute if you've got a 1 million, 3 million or 5 million peso coverage policy, it's going to cover everything. In a lot of instances, there's limitations, not only just in the 5 million maximum cap, but also the benefit levels have limitations, and also the amount of times you can see a specialist, the amount of times you can see a surgeon, the equipment that they can use in an operation is limited to certain amounts, and there's geographical and regional restrictions on what they think is fair usage, etc. Do bear these in mind because it's not as simple and plain sailing as you think it might be. As I said, I've got a policy with Pacific Cross, 5 million, because it suits me and I'm based in the Philippines as a solo parent and I'm not planning on going anywhere anytime soon. As most people know, when you become a single parent, your life is kind of over. But I do have the protection, but I am aware of the small print and you guys do need to be aware of the small print. When my son is grown up, I will be considering international health insurance would be probably a better fit for me because it gives me more options if I'm transient between other countries, more so than Pacific Cross. I hope you found this of interest. I hope you found that brief deep dive into the Pacific Cross policy interesting. Just to finish off on Pacific Cross, I've got a couple of other things that may well be of interest to you. I need my glasses for this. Pacific Cross has recently disclosed that Paramount Life and General Insurance Corporation, Paramount, is acquiring Pacific Cross International, potentially reshaping the company's position in the international health insurance market. The details of this acquisition remain limited at this stage, with no official announcements available online. Now, what I'm talking about with regards to individual policies versus pooled claims, this is what's going to come onto. This might well be news to you if you're a Pacific Cross holder, or you're thinking about being a Pacific Cross holder. One unique aspect of Pacific Cross's renewal pricing structure, and something that prospective customers should be aware of, is that even their individual plans are experience rated. Unlike most high-end international health insurers, which I'm going to be talking about in a moment, unlike most high-end international health insurers that pool risk across a wider portfolio, Pacific Cross calculates premiums based on an individual's own claims history. This can lead to more volatile pricing year over year, particularly for individuals with significant medical claims. While this model can sometimes work in favour of policyholders with low claims, it lacks the predictability of community-rated or pooled group health insurance plans. For those considering a Pacific Cross policy, it's essential to factor in the potential for fluctuating renewal costs based on personal claims experience. Now, that's very, very important. I'm going to do a brief diagram of how that may well affect you in the longer term, which I hope you will find of some interest if you're considering Pacific Cross as a policy holder, or you are an existing Pacific Cross health insurance policy holder. Just in finalising the acquisition of Pacific Cross by Paramount, while Pacific Cross's business remains operational as usual for now, policyholders should keep a close eye on any upcoming changes that may arise from the transition. Additionally, for those considering a high-end international health insurance policy, it's crucial to understand how Pacific Cross's experience-rated model differs from pooled or community-rated plans, particularly in terms of renewal pricing stability. Now, when it comes to Pacific Cross's individual ratings policy based on claims experience, in a nutshell, what that means is your premiums are going to be based on what claims you make with Pacific Cross. The more claims you make, the more they're going to bump up your premium. In very basic diagrammatic terms, please excuse my artwork here, but here we have premiums for the standard rate chart with Pacific Cross. So you've got a premium per annum for people aged between 50 and 55. Then it goes up for people between 56 and 60, 61 to 65, 66 to 70, 71 to 75, and 76 to 80, etc. And within this margin is the standard premiums. So it could be that for everybody in this 50 to 55, the premium is, say, 60,000 peso. Then it goes up to 65,000 peso. Then it goes up to, say, 70,000. 75. I'm not saying it. This is the exact cost, but you get the idea, yeah? 85k. Now, if you don't claim, if you hold the policy from age 50 all the way up to age 80, and you don't claim, you're going to fall within the standard bands for costs. So this is, if that's the standard banding, the standard cost, you would pay for those 5 years 60,000 peso a year. In those years, you'd pay 65. And up here, say, for example, in those 5 years, you'd pay 80,000. But that's assuming you never make a claim. If you start making a claim, and if they knock out any pre-existing medical conditions, if you're sick there, then they might knock out that claim and say, we're not covering you for that anymore because it's too much of a risk for them. But essentially, assuming that you don't make any claims, which is highly unlikely as you get older. In your latter years, we get sick, don't we? So if you start making claims, these are no longer valid, these premiums. Those are standard premiums. And based on their claims experience that Pacific Cross have with you, what are they going to do? They're going to bump up your premiums. So instead, if you make a lot of claims, they might not even insure you there. They might say, sorry, we're not insuring you anymore. You kind of hit the limits. But say the normal premium here would be 75,000 a year. They might say, no, we're loading you now. So now you have to pay, say, 110,000 because you've made a lot of claims, so you could pay more. And they'll load up your premiums from standard with extra costs, extra fees per annum, based on their experience with you. Your policy, your claims experience. Chances are you're going to make claims, and as you do, you're not falling within the standard range anymore. You're not falling within the standard rate chart, so they're going to bump up your premiums. So just like renewable life assurance, renewable life assurance policies start off low. If you've got guaranteed premiums, they start up here because that's the premium you pay for life, which is guaranteed. But if it's a renewable premium, you think, oh, actually, okay, well, this renewable premium is only, say, $100 per month for this life assurance, and this one, which is guaranteed, is $200. So we'll opt for the cheaper one, but that's guaranteed throughout the term. It's guaranteed right till the end, not to go up in price. You know what's going to happen with the renewable one? It starts off a lot cheaper, half the price, but it does that. It ends up costing maybe $300 come the end, because they get you in cheap. And then once you start paying the premiums, it's too expensive to change. Same goes for health insurance. So when you've got individual claims policies, like Pacific Cross, in the long run, they might work out more expensive. Now, I'll explain the difference with a healthcare provider that's maybe international, which is based on pooled claims experience. The way that works is that not just one policy, but all the policies is a great big pool. It's a great big fund. It's all pooled. And all of the policies are in there, like pepperoni on a pizza. It's all in there together. And the whole pooled fund is liable for the claims of all of the policies within it. Some people are not going to make any claims. Some people are going to make a lot of claims. But it all comes out in the wash. The thing is, the difference is with international policies is that if you make additional one, two, three more, or additional claims, it doesn't necessarily affect your policy because it's a pooled coverage. And some of these large international health insurance providers are some of the largest companies in the world. They're worth billions. There's huge American ones, for example, that provide worldwide coverage. If you make 2 or 3 or 4 claims on your policy, they're not going to care. It's not even a drop in their ocean. Whereas with someone like Pacific Cross, if you make claims, you're virtually guaranteed that your premium is going to go up next year and the year after and the year after, and it's going to snowball. So whereas in my previous experience, Pacific Cross might look cheap initially, but over the longer term, depending on their claims experience with you, your relationship, just your personal relationship between you and your policy with Pacific Cross and them, the company, if you start making claims, they're going to start ratcheting up and your premiums are going to skyrocket. So do be aware of that. As I said, I've read out the terminology in the independent review. You heard it for yourself. Right, the wonders of the edit. I've wiped my board down. Let's continue. Right, so in summarising the difference between regional / national and international healthcare providers and premiums with that idea of pooled investments versus individual policy claims history, you could look at the diagram for costs over the longer term, something similar to this. If you start making claims on your policy, which, let's face it, if you don't think you're ever going to make a claim on a policy, why would you have health insurance in the first place? You just have a little bit of money in cash on the side, wouldn't you? But let's face it, we all kind of think we're going to get old and we're going to get sick, yeah? So it's hence the reason we've got health insurance in the first place. We think we're going to need it, so we need to ensure that it's there when we need it. So I did some costings just out of interest on a Pacific Cross, which is a regional policy for a 61-year-old, and the premium came out approximately 90,000 peso per annum for a 61-year-old, okay? Now, let's assume he's 61, so let's say 15 years. Let's just say 15 years to there is 15 years. Now, for the same amount of cover, an international health insurance policy would be 190,000 pesos. You think, what? You've got to be joking, haven't you? 90,000 for Pacific Cross, 190,000 for international healthcare. But there's a lot of differences between the two. First of all, this 90,000, if you start claiming on it, that premium is going to do that. in the future. It's not going to stay at 90,000 each year for very long at all before it skyrockets. This 190,000, because it's based on pooled claims history of the whole company, not just your policy, is more likely to do that. It will go up depending on your age. It's based on pooled policies of the whole company. So it's going to be much more known. Remember what I read out in that independent report? You just don't know with Pacific Cross. So although you might be starting off lower, if you've got high claims, it's going to skyrocket in the future. So which is going to be cheaper over a 15-year period in the long run? Quite possibly the one that seemed really expensive to begin with. The other difference, I'm just going to wipe my board down again. Right, wonders of the edit. The other major difference, bearing in mind international health cover is likely to be about double the cost initially. But as per that diagram, it's not always that simple, is it, longer term? Depends on your claims history. What's the other difference? Well, why would you pay double? Well, here we go. There's my picture of the Philippines. I didn't do very well at art. Now, if you've got a Pacific Cross policy, we've already seen in the deep dive that it only covers you for emergency cover whilst you're abroad, only for 30 days. You can't travel abroad for health cover to have any operations, anything major done. You can't travel abroad. Your home base is the Philippines, so that's where you're going to get treated. International health cover, would you pay double initially? Maybe not even double longer term, because as I said with premiums. But the benefit of international health cover is Singapore. The prices that I did excluded the USA, but it covered everywhere else in the world. So if you're living in the Philippines and you need a heart bypass, with Pacific Cross, you're getting it done in the Philippines. And there was an argument that most of the good Philippine doctors are OFWs because they can earn a lot more money abroad. So who's left? You know, there are some, that's not said, there are some very, very good doctors in the Philippines, don't get me wrong. But you haven't got any choice. That's where you're going to get your heart bypass. Whereas if you've got international health cover, you might be living in the Philippines paying double. But you can have it done in Singapore, Dubai, Malaysia, Thailand, Spain, wherever you want. So there's a key difference, because ask yourself, if money wasn't an object and you knew you were covered and you needed a heart bypass, double heart bypass, triple heart bypass, quadruple heart bypass, whatever operation you needed, and you had a choice of having it done in the Philippines or done in Singapore, Malaysia, Thailand, Dubai, Abu Dhabi, where would you have it done? You know the answer as well as I do. You're probably, out of the 5, the Philippines is probably going to be 5th on the list. If you're able to travel. Of course, if it's a massive emergency, you're going to have it done down the road. But at least with the health cover, you can have it done in St. Luke's, you can have it done at Medical City or wherever, just like you can with Pacific Cross. So you can have it done at a top hospital in the Philippines, but you have a choice. And I know full well that the majority of you guys, myself included, given the choice of having an operation done at a 4/5-star place in the Philippines or going internationally to one of those places I mentioned, I know that where I would go, and I'm pretty much can guarantee you'd make the same decision as me. You'd go and have it done abroad. So your choice is Pacific Cross or a national health insurance provider. You're going to have your operation and your treatment in the Philippines. International health policy, that's supposed to represent the globe, by the way. You can have it done anywhere, excluding the USA, although you can pay extra and include the USA. You probably won't want to do that because the premiums would be crazy. But excluding the USA, you can pretty much have your operation done anywhere you want. So there is a huge difference. Bearing in mind as well that initially a cheap premium is not necessarily going to be a cheaper premium longer term. If you make a lot of claims, it could well be that you've got the flexibility of an international health policy at the same cost as your national regional health policy. It's loaded you up over the years because you've made claims against them, whereas your international health policy hasn't given you any extra loading because they're able to take your claims on the chin because it's all part of the pooled fund. I hope you found this video of interest. Please like and subscribe if you haven't already done so. It really does help my channel. Thank you so much if you've subscribed already. Hit the notification button so that you are notified of my next video. Please pass this on to anybody that may have a Pacific Cross policy that you know of or who is considering Pacific Cross locally. because there are some things in that deep dive that could be extremely useful for them. I've also included in the description a link to my website where you can complete a very, very brief form. I can introduce you to the main person at Pacific Cross, the American agent who deals with all of the expat applications, and also has pays for an office to be run there and helps claimants with Pacific Cross policies get through the claims process should they be unfortunate enough to suffer ill health and need an operation or any medical treatment. Their office is there to help them process the claims. It's always wise to have somebody locally to fight your corner for you. Comes very highly recommended, and I used him when I took out my Pacific Cross policy and do recommend that wholeheartedly. Internationally also is covered on that form if you'd like to get some quotes for international health cover, if you think it might be the better option for you. Certainly if you are more transient and you're thinking about moving abroad in the future and you're doing, say, only 2, 3, 4 months in the Philippines, 2, 3, 4 months in Thailand, Malaysia, etc. If you're traveling more, then the international health policy is probably going to be your best option for sure. That's something that I'll be taking out when my son grows up and he's not so dependent on me, and I'll be traveling a bit more. Then I'll be looking at international health cover rather than currently Pacific Cross on a regional basis. But whatever shoe fits, guys, that's the one for you. Thank you so much. Enjoy.